Is continuing to watch for how COVID-19 is rippling through the economy.
The economy is running too hot, and rates are going to rise.
Today, the national average hit a record high.
One thing they seem sure of is that a recession is on the way.
It's not really what happens in the world, it's how you're positioned when it happens. And so what I do my best to do is think, how might I best position myself to not only survive difficult times, but to do better. Everyone should learn about the history of money in the Federal Reserve. If you can figure out the general inflation, whether you're in real estate or stocks or business or oil or even crypto, if you can figure out the force of inflation-deflation, you're better prepared to position yourself advantageously.
Andy, great to be with you once again. You're like our go-to person, and why I always have such joy when I spend time with you, and I've spent time with you off camera, where you're explaining things to me and walking me through things, and it's a spiritual experience talking about this stuff with you, because you genuinely have this heartfelt desire to teach. You get excited when people are learning something, and you get even more excited when it's enriching them, when people are taking what they're learning and they're putting it on the ground and they're gaining wealth. And you just have this uncanny talent to be able to translate kind of complex things and teach them in a way that makes sense. Or maybe it's just me, because maybe I have a hard time.
It's probably just you.
I'm saying maybe my brain has a harder time wrapping around things like options and so on. But you just make it stick the way you teach it.
Well, that's kind of you to say. I have a simple brain. I really struggled in school. Really struggled as a young man in school, and so when I could grasp hold of something, I was pretty thrilled if I ever did get something. And my father was a teacher.
Oh, wow.
And so I try to be like my dad.
So, I know that most people probably have seen us have some conversations around money before, but in your background, what led you here? I mean, you're 6'8", you were a college basketball player, right? And then you got out of school, but how did you end up, working with Robert Kiyosaki and kind of moving into those realms and getting into what you're doing today?
Yeah, well, Robert just has more and more bad luck all the time, and no, what happened was I never found my way in school, and as you mentioned, I was probably the worst basketball player in the history of my school. The joke I tell over and over again is I can't jump, I can't shoot, but I could foul, so they found a place for me. When college was over, I never found my way into the catalog of accounting, biology down to zoology. I never found that. So I wound up in sales. And it was the 90s, and the trading software had come out. And I was a pretty good pitch man, and I started pitching software and trainings to trade stock. I thought, well, I can either sell this stuff or I could learn it and do it. And so I thought, I'm going to do my best to learn it and do it. And one thing led to another, and one day Robert's office called, and I had been teaching things in his book. And when he called, someone said, "Hey, we hear you use the cash flow quadrant in your speeches." I thought, oh, they're going to sue me. I'm using their stuff. And actually, it was the opposite. They said, no, we really would like to have someone come and teach about stocks a little bit. And so we became acquainted, and I've been a rich dad advisor in that volunteer role for about 15 years.
Wow. So the world, every time we talk, seems to be changing.
Oh, yeah.
And if I go back to the series, the money series we did a few years ago, and what you delivered there and what we talked about, so much has changed since then. COVID has happened, and that's impacted things. And now this stuff going on with Russia and Ukraine, this war. That's kind of impacted things. We're seeing inflation right now that is, I've seen it in my lifetime because I was alive in the 70s under Carter. But this is new to almost everybody, like seeing this kind of inflation and the pain at the pumps and, how much groceries are costing. And then we also see this stock market and this real estate market, which looks like a bubble. And I mean, so many dynamics of what's happening. How is what's going on in the world right now impacted your thinking and perspectives?
I see opportunity. Maybe that's just me and my default setting, but I've always known that there's opportunity everywhere. One person's tragedy is another person's opportunity. If a hurricane's coming, the insurance companies are freaking out, but Home Depot can't wait for the new rush of customers. And so in my brain, the way I think about it, the opportunity is in positioning. It's not really what happens in the world, it's how you're positioned when it happens. And so what I do my best to do is think, how might I best position myself or teach students on how they might position themselves to not only survive difficult times, but to do better.
To take advantage of the
To
opportunity.
improve their situation. And I think with the forces of, I don't think of inflation and deflation as a period of inflation, a period of deflation, or, chronologically. I think about it as a battle between forces that force prices down and the value of a dollar up, and forces that force a value of a dollar down and prices up. And of course, in the middle of this, everyone should learn about the history of money in the Federal Reserve. And so as we get into the conversation, I think there are some things out there right now to pay attention to concerning the U.S. dollar. That's really what's on my mind. If you can figure out the general inflation, whether in real estate or stocks or business or oil or even crypto, if you can figure out the force of inflation, deflation, you're better prepared to position yourself advantageously.
Well, let's dig into that. So explain that tug of war.
Well, I'm a big fan of history, not because I enjoy it, I do, but mostly when you understand the narrative of how something came to be, you can understand why it is and how it might behave or how fragile or strong it is. Good example of this is when I wrote 401 Chaos, I spent a lot of time with the narrative, and people have, really? That's how that started? How did that even work, right? So the history of the dollar, what is a dollar? Well, it comes from Europe. The word dollar is a European word. And in the early times of the United States, they had these little silver coins that were called a dollar. And they were generally accepted and generally used, and people had confidence in them. And so the powers that be said, this is what we're going to have is a dollar. And there were lots of different legislations that went on. But in the 40s, after World War II, that Bretton Woods Agreement is a big deal.
When you say Bretton Woods,
Yeah.
what is Bretton Woods?
In New Hampshire, after the war, all the countries got together, almost all of them, the big ones anyway. And they said, hey, how are we going to do commerce? What are we going to use? And they said, well, the U.S. has Fort Knox. They got a big store of gold in New York. Why not? And in Kentucky, why not let's just use dollars. Let's price things in dollars. Let's put oil and trade in dollars. And so they said, okay, it's backed by gold. We'll do that. That gave the United States a huge advantage. And the tentacles of that dollar reached into the system of how money is moved and converted and things are bought and sold. And it just gave the U.S. an advantage. Well, now, 1971, they're pulling all the gold out. And Nixon says, we can't keep up. We got to print it. He gives his little political speech and says, we're going to pull off the gold standard. Why didn't that just collapse it right there? Why didn't everyone just say, well, the whole reason, that's why the narrative's important. The whole reason that we did this is because you're backed by gold. I mean, that's the reason we voted for you guys to be the safe currency. Right. But because the infrastructure became so dependent, it's like, live your life without email now once you got it.
Right.
And so what I see is more and more countries feeling that they have to use a dollar, not that they get to.
You're right.
In Bretton Woods, they voted and said, we want to use the dollar. That's changed to where I feel they look at the United States and say, what makes them just be able to hang on to this power of a dollar? They get to print as much as they want. Everyone buys their bonds because they're supposedly risk-free. Why is this? And so a good example.
Can I dig into that a little bit?
Yeah.
Here's some questions about your perspectives on this. Number one, is there any other currency that's backed by gold or something that would say that that there's a better alternative at the moment?
Well, the rumor is that Vladimir Putin would like to start one.
Yes.
Because he's been hoarding gold and he'd like to start one. But I think the bigger threat is China. For example, the Saudis sell oil to the United States. They have a surplus. Russia has a surplus. We make 10 million barrels a day or something. We have a shortfall of about, I think we use 17 into every 10 we pump. And so the Saudis sell us oil, and that's all done in dollars. Well, China has gone to the Saudis and said, hey, we don't like Bitcoin, but we'll have our own little cryptocurrency we have. Will you take it? And the Saudis are saying, yeah, I think we will. Well, that changes things. When people are willing to do business outside of the dollar and circumvent all of the fees and problems that come with trying to use a dollar, that would mean to me, well, maybe there's going to be less demand for dollars. And if there's less demand for dollars at the rate we print, I think that gives a little bit of an edge to the inflation side of the equation. And I think when you go to the gas pump, next time you go, think about your positioning. Take this thought to heart. You know, if you've tuned in and you're interested in money, study money. If you'd like to have more of it, study it.
Right.
If you want to improve, study it. And think about your position at the gas pump. When I go to the gas pump and I see it's up, I think about all the shares of ExxonMobil that I own. And I see someone across there, and it's heartbreaking because maybe it's a mother who's trying to make ends meet. Her income didn't change. Her expenses did, and her free cash that she has for piano lessons she's got to make some decisions now about the quality of her life. Why? Because she's positioned as a consumer of items, and other people, stock owners, are positioned as producers. A friend of mine, he was poo-pooing stocks. Well, I can hold gold in my hand and I can touch real estate. I'm like, well, what's in your pocket? It's an Apple phone. Oh, and it's on the AT&T network or the Verizon network or whatever. And you're using Apple TV. What else? Oh, you got an American Express card in there. That's as real. Those bills are as real to you as your rent. And I gave him a challenge. I go, try to go a month without giving money to Warren Buffett. He goes, what do I mean? I go, well, let's list all the company he owns. Everything from Heinz Ketchup to Coca-Cola to American Express to Geico to See's Candies to furniture to everything. It's almost impossible not to live in the United States and not give that guy some money every month.
Right.
And so since he's positioned himself as a producer of goods, that no matter how much equality they try to have income-wise, no matter how much socialism they want to put out there, the problem is consumers are always going to get money and give it right back to the producers. So when you position yourself as a producer of value, the more people you can serve, the more wealthy you become. Most people serve one guy, a boss.
Is this a part of the reason why there was such a huge wealth transfer during
and the
COVID?
gap, right?
And the increased wealth gap as a result.
Yeah, and that gap's not good. No. It's not a healthy thing. It's not a good thing. And there's two approaches to it. Some people think, well, we need a systemic solution that's legislative. We need to get some type of legislation to balance this out. Maybe that's true. I don't know. My feeling is the solution is educational. I think that people feel trapped because in school they learn to go to school, get a job, put your money in your 401k, and maybe you retire someday. And that hasn't worked for a lot of people. So the fact that their whole mindset and context is job, consume, they're seeking money rather than seeking assets.
Yeah.
There's other people that break out of that, and when I get some cash, I don't want the cash, I want the assets. So the producers are constantly trying to get rid of cash and get assets, and the consumers are constantly trying to get more cash from their job. And that context creates a wealth gap and concentrates wealth in the people that study the acquisition of assets.
And then when you have, because the big heartbreak, at least in part, is the people who probably are nearing or at retirement age who did I went to work, I funded my 401k, et cetera, et cetera, et cetera. And now they have inflation, which, it's interesting that especially the current administration, talking about, we're not going to tax the middle class, we're going to tax the wealthy, et cetera, but it's a sleight of hand, isn't it? Because, when you have inflation the way it is, and what's the idea? We're printing all this money and they're giving it supposedly to middle class. And middle class, like you said, is taking it and giving it to producers. And next thing you know, the producers are wealthier. They're no wealthier, but the value of the dollar the dollar is devalued.
Yes.
And now they're sitting there with ready to retire and saying, my buying power is gone. I can't retire now.
What's crazy is it kills people who save money because their savings has lost value. But what's more important is it enriches people who are in debt.
Yes.
Because think about it, if your asset column grows, your net worth grows. If your liability column shrinks, your net worth grows.
Yeah.
And so people that went out and went into millions and millions of dollars of debt, say, to buy real estate. And that debt's at a fixed rate, and it's fixed. It's not going to change. Dollar loses value, home prices double, equity is through the roof, they're wealthy.
Right.
And so it's the debtors, the people that so I don't disagree with like the gurus of in the Dave Ramsey world and the Susie Orman world, but those guys aren't creative.
No.
They say, look, quit drinking a cappuccino and go get Maxwell House and
it's like
quit
about
spending.
privation.
It's about discipline, right? It's simply parental restriction and discipline. There's no creativity in creating new money. There's like, here's your job, that's what you got to work with, take everything else down. That's not an expansive life.
Right.
What I try to teach people is the creativity of building businesses or which stocks, an expansion of assets to increase income rather than just decrease expenses. Part of that's using debt, which makes sense to borrow things that are going down in value, namely the U.S. dollar.
Right. And I think the distinction that's important is we're talking about consumer debt, like if you're living on credit cards to go on vacations or something. That's not. We're not talking about that kind of debt.
Investment debt.
We're talking about you're borrowing money to invest in something.
Yes.
Because their idea, maybe to your point, is you'll get your mortgage paid off, accelerate the payoff of your house, as compared to say maybe pull the equity out and buy another home and rent it. Right.
Beautifully simple example.
Yeah. So and that's the difference between saying you're taking dollars, putting it into an asset to pay it off,
right.
But now you don't have the wherewithal to expand the assets. So your point being, the game the government plays is what? We've taken a lot of debt, devalue the dollar, so when we're paying it back with dollars worth less than what we borrowed, so we end up ahead. We could play the same game as what you're saying.
Yeah, what's brutal about that is the consumer or you and I play the debt game where we would say, well, debt's like fire. It's a tool. It could burn you, but it could heat your home. You could wave it in front of the bear and scare them away, or scar yourself for life. So it's a very dangerous tool if you don't know what you're using. But if you're in the Boy Scouts, first thing they do is teach you how to make a fire so you don't freeze to death, right? Well, we play that game with debt. Debt's, like you said, if it's not consumer debt, we go in debt, we can pay it off. Government doesn't play that game. Government goes as much debt as they want to. They go in. There's this hilarious joke called a debt ceiling, where Congress says this is all the debt by law we can go into. Right. Then they hit it, and then they're saber rattling. Well, it's your fault. It's your fault. But they raise it every time. They don't care about the debt. They'll just borrow more to pay off what they borrowed. They'll Ponzi scheme that. They'll borrow new money to pay off old debts. Fine. The game they play is the inflation game. We can print as much money as we want to pay our debt, so we have unlimited debt we can go into. What we have to do is keep the value of our currency. And in their brain, the modern monetary theorists, the Warren Moslers, Stephanie Keltons, the Bernie Sanders of the world, they say, well, you can just do this by taxation. If you tax people, they have to come up with dollars, and if they have to come up with dollars or go to jail, that creates demand for a dollar, so we can issue it, and we can pull it out with taxes and control it. Well, that hasn't worked for dictators like the people in Venezuela or the people in Zimbabwe. What's interesting is if the U.S. loses that position of the world's reserve currency, think about that. If China now is going to buy oil without a dollar, they don't need one anymore. That's less of a demand or a need for a dollar. Right. That really puts the Fed, the United States, in kind of a tough spot because they operate on a framework of assuming, well, everyone needs dollars. Come on, we're the world reserve currency. If that changes, and this is why I think it might. I mentioned earlier that in the 40s we voted and said the world said we want to use the dollar, and now they feel somewhat burdened by being forced to use the dollar. Even if you're a communist, communists and socialists love rules as long as the rules agree with what they want. But the moment you throw a rule at them that makes them uncomfortable and takes their freedom down, they turn into capitalists pretty quick. Yeah, right. So if the rest of the world feels forced to use the dollar, every day they're going to wake up in the morning and say, how do we change this? How do we change this? And so I think the U.S., their position of the world's reserve currency, if it's one of leverage, pretty soon it comes down to military might, and are you willing to use it? And I don't think we're that way. Putin would use military might, but I don't think we would. And if the rest of the world says, you know what, we can do better for ourselves if we get a different system than the U.S. dollar, the world reserve currency, why wouldn't they work towards that? So I think the energy of the world would work against kind of dethroning the dollar if they could. That's just an opinion.
How catastrophic would it be if the dollar ceased being the reserve currency?
Well, I think it's tough because there's so much infrastructure that requires it right now, or they'd probably be gone today. So it would take some time to do, and it's a lot like the war in Ukraine. You know, let's quit buying. Germany quit buying natural gas from Russia. Okay, that hurts Russia, but also hurts Germany.
Right.
So they have to be able to do commerce and do it well, and right now that means they have to use the dollar whether they like it or not. But like Bitcoin's a game changer, crypto's a game changer.
You're anticipating my next question. So where's crypto come into all this?
Yeah, crypto. People like crypto. You know me, that I'm very measured in. If you can't poke a hole in it, you don't understand it.
Right.
Like there is no perfect investment.
Right.
Stocks aren't perfect. Real estate isn't perfect. And people get almost religiously into the dogma. Oh, crypto's the thing. I'm a crypto millionaire. Crypto is a capital gain investment. Doesn't cash flow. It's not a business that produces anything well. It does circumvent central banking, which a lot of people like. That's why the gold bugs like it. But it also becomes what I like about it. It's very inexpensive to exchange massive amounts of money. Like billions of dollars change hands more efficiently with crypto than in other traditional banking systems. But crypto is still not bigger than the military might of a company or of a country. China can say we're not going to use it. They can ban it, and people say, well, they really can't enforce that. Well, if you're willing to break the law, take the chance, go for it. But the people that make the laws still have the power. I think Bitcoin is the first in a generation of crypto. Eventually, it's going to land with electronics. It's going to land with some type of crypto. I don't think it's going to be Bitcoin long term. And the reason I think that is Ethereum's already a better technology. You know, you can have an algorithm exchange inside of a block in the blockchain that is better. That's a better technology than Bitcoin. And Bitcoin has as we know, a growing carbon footprint that is just insane. I mean, it just grows and grows as all those computers have to solve all those problems and verify an ever-expanding ledger. So someone will figure out a problem a solution to that. An entrepreneur somewhere will say, okay, crypto's awesome, Bitcoin's awesome, here's its downside. There'll be a better mousetrap. But I do think blockchain, God, why can't we vote with that?
Right.
That would be nice, right?
We should be voting with it.
Yeah, Vladimir wouldn't like that. Right.
Unfortunately, I don't think some people in this country would either.
Yeah, maybe so.
So, and I think, but Bitcoin, you know, the distinction they make, you know, is that it's the most pure form of currency, if you will, in the sense that, you know, we take Ethereum and the other technologies, you know, they're kind of managed by people, and it still have kind of a centralized component, where Bitcoin is kind of left to its own devices. It's inviolate. You know, you can't really do anything to corrupt it, and it's just really for a store of value, as compared to saying there's utility in it. You know, the Ethereum network's got utility because you know, so much stuff is built on it.
Right.
So they're kind of different
Animals
plays.
that
Yeah,
way.
yeah.
A little bit. Bitcoin to me is like the Netscape. You know, we come out with this hypertext transfer protocol where we have a web now. Yeah. And Netscape was it. Oh, I'm going to get on Netscape. And who uses Netscape now? I just think that Bitcoin is like like Netscape was a watershed breakthrough first thing. And I just look, any technology I've ever seen, the first round of it is just the CD. You don't even have one in your computer anymore. And it was going to be the way the future was. So I just know that the way technology grows, there's just a better mousetrap. And that happens faster and faster now with people working. But it does take away from the demand for gold, and it does take away from a demand for dollar. Think about it. We have another place to store value, right, other than a dollar, other than gold. And so as that expands, that obviously if dollars are leaving, wealth is leaving dollars and going into that.
Yeah.
Wealth is leaving gold and going into that. That's created another space. So yeah, that's a devaluer, I would think, of a dollar.
And you're making an important point there, because all this I think people understand dollars as a commodity, right? And I think this is the study, that you're encouraging, saying you got to really understand, what a dollar is, the history of it, what it means today, because what makes a dollar valuable is a demand for it, and that demand, every time they're printing more, right? There's less demand because there's more dollars. But every time somebody's saying, I'm going to trade some dollars for gold, I'm going to trade some dollars for Bitcoin or any cryptocurrency, et cetera, then they want dollars less, they want something else more. And that's when it starts devaluing. And it's not so much that, like at the gas pump, it's not that gallon of gas isn't worth any more money.
Yeah.
It has the same value in your car as it did when it was half that price. It's just that the dollars have less value, therefore you need more of them to buy the same amount of gas.
That's perfectly said. The caloric value, its energy value doesn't change. You have a 2,000 square foot rental house, the square footage hasn't changed. So you have an acre of land, the acre hasn't changed, just the dollar that's gone down. And all the dollars, like if you were to ask someone, what's a dollar? Well, it's just paper in my wallet, right? It's really just a credit on a ledger. That's what it is. And that little piece of paper, it used to be redeemable for something. What can you redeem it for? Well, it's a credit on a ledger. Right. So the word fiat means by decree, right? It is. And people say, well, how can you do that? And I says, well, you ever been to a basketball game? I remember I played in an alumni tournament. And the way they do the alumni tournament is every year older you are than your underclassmen, they give you a point to start the game to make it, because I'm playing since 20 years old. They got to spot me 34 points, right? And so one year, we had a pretty good team. The other team says, well, they don't get points. They're better than us, even though they're old. And the guy on the ledger says, it's the way it is. You can invent points. You just mark them down there, and it's by decree.
Right.
And when you have that kind of ability to print, we know this on the fiscal side. We talked about the borrowing. The words that are always used by the Congressional Budget Office, by the Comptroller of the United States, in those government agencies, the word is always unsustainable. That is the word. The perpetual borrowing. When you look at the financial statement of the United States, it's not the 30 trillion we've borrowed, it's the 200 trillion we've promised. And that's what no one ever talks about on either side of the aisle.
Talk about what did we promise? Medicare?
Obama, Social Security, pensions. Yeah. Pensions, the idea of paying people, whether they're medical dependent or pensioner, the idea of paying people that don't work is a very new idea. You used to work in the farm till you died, or work in the coal mine till you died. Now, in the late 1800s, we had this idea, well, let's retire for the first time. Let's start with the friars. You say, hey, the poor old friar, let's just give him a pension. And then American Express was the first corporate one. And they said, back then they were a rail system like UPS. They were not a credit card company back then. And they said, let's give people pensions. Well, the problem with that is on a financial statement, that's not money that's borrowed, it's money that's promised. Right. It's like saying to your son, hey, if you get good grades, I'll pay for your college.
It's still a liability, though.
You still owe the money.
Yeah.
If you tell your son, I'll pay for your college, that doesn't show up anywhere on your financial statement. It's just a promise, but you still owe him.
But on a financial statement for a company,
unfunded liability.
It's got to be, exactly. It's still a liability there. So for the United States,
about 165 trillion in unfunded liabilities right now, and 30 trillion in what we already owe. So it's about $200 trillion, just shy.
There's just no way. And there's no conceivable way that this gets handled.
GDP. There's three ways you could attack that. You either tax more, you spend less. Or you grow the economy. Those are the three things. And our economy is about 20 trillion, and 220, you tax the whole thing, great. Yeah. It's just, and the interest on it's low because the bonds now are low interest. There's so many things. I would encourage people to study the Fed. Yeah. Because if you look at the Fed's balance sheet in 2006, before the subprime meltdown, basically it's just currency. They had a little repo stuff. There's 4 accounts: reverse repo, treasury. That's where they keep their money.
What's reverse repo?
A reverse repo agreement is where you take, if I had, say, a bond, and I sell it to you where we have an agreement where it's repurchased at a higher amount. So in other words, you could take anything. You sell it to a person, and then you agree to buy it back at a higher rate.
Yeah, what they used to call government savings bonds.
And the reason they do that is member banks, there's 4 accounts. There's the Treasury, there's the reverse repo, there's the currency in circulation, and then there's the big member banks can store money there and get interest on it, like the Wells Fargos and the big banks. Well, they can control interest rate. When the Fed says we're going to set the interest rate at X, they can't. It's not like a law that says everyone has to do this interest rate. What it really is it's a competitor. So if I say, well, my interest rate is 1%, how are you going to charge 2? Because I have risk-free stuff at 1.
Right.
And how can you charge a half, right? And so they set a floor on how low that goes. Well, the international banks and the money markets can't get that because they're not members, but they can do reverse repos. And so that helps keep a floor. It helps interest rates from going negative because otherwise, competitively, they could go negative.
And they did actually.
They do. They are in some banks.
Where basically people are saying, I'm paying you to store my money.
It's hard for people to wrap their head around that, but think of a bank. A bank has to make money. So there's 2 ways they could do it. Okay, give us your savings and we'll pay you to have some savings. So that's an expense. So then they take that and they loan it to you for more, and they get that. Well, if all of a sudden they can't get people to borrow, okay, great. We'll pay you to borrow, but we'll charge you to save. And they just flip it.
Wow.
Crazy, but it happens. It does some weird things to the economy. But the big picture is this, and this is what I would tell people in these times of inflation. Study deflationary pressure and inflationary pressure, and learn to get your own personal balance sheet arranged in such a way, like Warren Buffett does, to where either way you have some exposure to some good things. Inflationary stuff, debt is like awesome if it's inflationary. Cash is awesome in deflation. Right. Warren Buffett has $143 billion ready to deploy when things fall. He's also got a few $100 billion in stocks. And stocks benefit from inflation, whereas cash does not. But when it flips and the stocks fall, the cash now is more valuable to go buy more asset. And so having a balance of doing that, I think Warren Buffett has the most balanced balance sheet for inflation. He's ready to pounce if there's deflation, but he's going to have massive more wealth if we have inflation.
And it's an interesting concept because people would say, well, do I need to don't stay in cash because of inflation and that money's worth less money every day.
Yeah.
But what you're talking about really is sort of hedging and risk management and being able to take advantage of opportunity either way. I mean, I started doing this in my crypto account, for example, where I said, a couple of weeks ago I saw it kind of peaking up, and I said, I'm going to sell off probably 30%, right, and take some profit here, and I'm going to leave it in cash. So if it happens to come back down, I'll buy more again.
Cash is more valuable to
buy more. If it keeps going up, I'm happy because I'm holding. So it's, and I guess in some respects you look and say, but then you don't get it feels like you're treading water because you're never really taking the full up or the full down side advantage. But at the same time, you're sort of prepped, and so there's got to be some aspect of this where you're making sure that you're staying, I guess, profitable as things are moving along. Do you understand what I'm saying?
Yeah.
I think you do that through options.
Yeah, options are really important. We've had some great conversations about options. Yeah. I wouldn't trade stocks or invest in stocks without options. I wouldn't even do it.
So explain what an option is, just for if somebody doesn't understand.
Yeah, there's 2 types of options, so it's pretty simple. There's only 2 things to learn. Options is another word for choice, and what it does is it locks in my choice for a certain amount of time. So it's kind of nice. Let's say you were in the department store, you're at Nordstrom, and you see some jeans, and you think, do I have a pair like that at home, or do these? Your wife might say, well, do these color jeans match my blouse? And so she doesn't want to buy right now because she doesn't want to have to go and return it and all this. And she goes to the clerk and says, hey, you know what? You put this on layaway for me for just a minute. Will you just hold these and don't let anyone else buy them, but just Put them in the back with my name on it for a couple days, and I'll be back and tell you whether I want to buy them or not. That's an option. Now, she doesn't have to come back,
Right.
but she can if she wants.
Right.
And the clerk has made a promise, and she has the choice.
Right.
The only difference is in the stock market, when you go shopping for stocks, that clerk won't put it there for free. They're going to charge you a small amount and say, yeah, I'll hold it for a couple days or a month or 6 months, however long you want the option. But there's something called a premium. That gives you a lot of power. Think about that. What's the damnable misery of the stock market? Well, most people think that stock investing is about the prices of stocks. Stock goes up, it's good. Stock goes down, it's bad. That's what the people on CNBC. There's very little talk about dividends and cash flow,
Right.
Which is really where, if you read Warren Buffett's yearly statement, first thing he'll say is, cash flow's king. We own businesses. Are they selling stuff? He's never talking about the prices of the stocks. He's talking about, are they making me money in dividends? Are they profitable? So, but with that said, the risk of stocks is there's no control over the price. You just can't control it. Well, an option gives you that control. Look, I want to have the right to sell my stock at this price anytime I want during the next 6 months. You could do the same thing with crypto. You know, if you have a Bitcoin, say it's about, in the 40s, let's say 40,000, and you say, you know what, I'm not comfortable with it going below 35. If it went below 35, that'd be more than I could take. You can buy an option that would give you the right or the choice to sell at 35,000. No matter how far down it went below that, that person made you that promise. You do have that choice. So it's insurance that way.
So that's a put or a call.
That'd be a put. A put gives me the right to sell something. A call gives me the right to buy something. What I generally do is I'm on the sell side of that stuff. An insurance company charges a premium, and to me, I think the best business in the world is insurance. I think it's the best business, bar none, in the world, because they don't have any manufacturing costs. They don't have any raw materials. Their raw materials aren't nearshored in a pandemic. Basically, they make money by making promises to people, and all that takes is a pen and a paper. I promise, and someone buys that. That's what underwriting is. They buy that.
Right.
When you can sell promises, you don't even have a factory to make anything.
Right.
And I think that's why insurance companies and banks are the biggest buildings on Wall Street.
Is it sort of like the house at the casino too? Meaning
Very much.
They've done the math, and there's going to be a bunch of money moving through this place, and we've really understand the dynamics of the math here, that we're always going to be making money, in the dynamic of that process. So it's kind of a similar. They play the house.
Yeah, with insurance company, they call it an actuary. They have actuarial tables. They can take the amount of cars in San Francisco and say, well, here's their make, model, density. Here's how many wrecks are going to happen. Here's what's going to. They can do all that stuff. And if you have a hurricane come through or an earthquake that's catastrophic, well, great. They'll just raise the premiums for the next round. It goes up.
Yeah, because they've been around for hundreds of
Yeah.
years, right? And I don't know of any that have failed, but I probably don't know the full history. Not the big ones, at least.
No.
But and they also somehow have survived black swan events. Meaning that things that they couldn't calculate in a typical actuarial table.
Yeah, I mean, but they can just raise the premium the next year for everybody. I mean, they
And they
can
can do
always
that.
raise future premiums because people have to have insurance.
Right.
And so that mentality is why I like to sell options, because all I'm doing is, if you have the choice, I'm making the promise.
Right.
And I love getting paid to promise things I want to do. I'll give you an example, not to get too wonky for the newbies.
Right.
But right now, when you'll see a war and something drop because of a war in Ukraine, I'll have my eye on several companies I think are very strong fundamentals, good balance sheets, but their price has just been a little too high for my liking. Well, when there's commotion or a pandemic or whatever the event is, and these drop, there's some emotion that Warren Buffett will tell you. He says, "I will tell you how to be rich. Close the doors." Right? This is the quote: "Close the doors. Be greedy when people are fearful, and be fearful when people are greedy." So when people are fearful, and the emotion of those prices going down, they're seeing it. They're freaking out because prices are going down. They're selling more. I'm losing. And Buffett sits back there and says, "Boy, this is a sale. I can't. This is Black Friday in the stock market, man. This is fantastic. Look at these bargains." And so he'll wait. Well, I'll do the same, and I'll wait until they get down. And then I'll sell a promise to buy it clear down here, which is something I want to do anyway. That's the beauty of that insurance. And sometimes it will get down there and I'll get paid to buy that stock. And sometimes it just goes up, but I keep the premiums.
And if for some reason there's some dynamic happening that was unanticipated, I guess that you are promising to buy it, so you're buying it when it triggers.
Yeah, I want it.
It's
No
so
question.
you have to exercise the option. And
Yeah, don't bluff.
Yeah.
Don't make promises you don't want to keep.
Yeah.
Right?
Well, you can't, right?
Right.
In this particular scenario, but basically you're buying it. You don't have any obligation other than to say that if it hits there, I'll buy it.
Yeah.
And I guess on the flip side, if you can get paid if you are willing to, if somebody else is willing to buy it, but they don't exercise their option.
I mean, if it goes below there, they'll exercise their option. They'll unload it for you. But the way I teach my son is, I started trading heavily with him when he was 14, 15. He's 16 now. And I always say, son, there's risk, okay? We don't know what won't be around and what will be obsolete 20 years from now. So there's risk. So get used to that. And if you have no tolerance for risk, then go get a job.
Right.
Right? So there's risk. You can lose money, son. I go, but think about this. You think you'll still be having Coca-Cola you think you'll have a grandson, you go out and have a Coke and a smile. And you think you'll buy that Oscar Mayer wiener with some Ore-Ida French fries and some Heinz ketchup on top 20 years from now? Go to a restaurant. When people say stocks aren't real, oh, well, gold's real, real estate's real. Go to a restaurant and ask for a bottle of ketchup, and they will bring you a bottle of Heinz ketchup 99% of the time. It'll be won't be Del Monte, it'll be frickin' Heinz. It's like, and people say, well, all I can, Heinz is going to be there. It's just going to be there, in my opinion. So I said, son, if you promise to buy it low, and it goes a little lower, where's it going to be in 30 years for you by the time you're my age?
Right.
Through the roof. Inflation.
Yeah.
Your long-term bet is on inflation.
Right.
So as long as they're printing money, and if it's here and I promise to buy it here, and it goes a little low and I have to buy it higher than it is now, I don't care. Because people get obsessed with trying to get the perfect low and sell the perfect high when it doesn't matter. Yeah. Look, I remember I was in New York once, and my kid was really young, and we were at Rockefeller Center to see the Christmas tree. And the ice rink is there where you can skate. Okay, I can play basketball. I don't skate, man. This is not Wayne Gretzky you're interviewing here. And my son says, Dad, can you take me out there? So I rent these skates.
So now you're almost 7 feet by the time
I'm like this, and I'm holding on. I've got one hand on the rail and one hand on his hood, and we're going around like idiots. Well, there's this kid that's doing spins, and this guy comes up and he says, hey, let me take your boy around. And so he takes him around, and and he's like, you're awesome, my dad's a moron, and he goes around, and when he's done, I shook his hand, and when I pulled it back, there's a $100 bill in there, and he said, hey, I can't do that. I mean, it took him around that's not worth $100. And I said, it was worth it to me.
Right.
Value's in the eye of the beholder. And so when Warren Buffett does this, he doesn't think, well, gee, I got screwed because it went a little lower. He says, look, this is the company I'm buying. This is their financial statement. This price makes sense to me. I can make money at this price. The dividend fits my formula at this price. And long term, I think inflation drives up anyway. So if I buy those jeans and then they go on sale in 2 weeks, nothing bothers me more than the person that goes back 2 weeks later and says, well, I bought these, now they're on sale, and you're screwing me. No. They had a product. You felt it was a fair exchange. If it goes down after that, why all of a sudden is there no value there all of a sudden?
Right.
So when you get into finance, understanding what value is, and that it's in the eye of the beholder, understanding that big picture of inflation and deflation, and choosing assets that you like, assets that you are comfortable with, whether it's real estate, stock, business, commodities, crypto, whatever your thing is going to be. Understand you have an asset column, a liability column, and you want to structure that and lean towards inflation or deflation slightly, being prepared for both as best you can. And that comes with just some simple study. And, the study's fun. When I was in college, organic chemistry, that's just as well been written in Japanese. I mean, I don't even know. She came in I was up there with all these, I'm a dumb jock, and all these pre-med guys are in there killing me and keeping the curve high. And she'd come in this side door and write for an hour, and I'd try to take notes, and I was panicking because I knew there'd be a quiz on Friday, and I didn't know what was going on. And to me, that's what education was, is trying to survive and swim and smart guys. After I got out of school, what I found was there's teachers that can really simplify this. They won't give you a test on Friday. They'll say, well, if it takes 2 Fridays to learn it, we'll work with you.
Right.
And what I discovered is learning can be awesome. It's illumination, it's discovery, those aha moments that click, and then all of a sudden you put it in your balance sheet. And mine's so imperfect. You know, I would be so out of line if I were to portray myself as some financial genius because I'm a rich dad advisor. Man, I've got bumps, bruises, scar tissue, blood, failure. But you know what? If you just keep swimming and keep buying assets, over time, you look back and you go, God, I got a couple of assets. I got something to my name here.
Right.
And when the market crashes or when there's a pandemic or when there's, you breathe a little easier because you decided to learn to buy some assets, imperfectly as you might have done it.
Yeah, well, you're constantly sculpting, aren't you? And then, of course, the environment changes, your age changes, everything changes, so you're constantly just remodeling a little bit, but you have to at least have some, you have to have some clay in your hands to do it. I guess that's the whole point,
for sure.
Right?
There'll be a point where people will see money not leave the context of job, earn, spend, rather than when they look at the gas pump and think, oh, this is killing me. What if all of a sudden you pull out your smartphone, in one hand you got the gas pump filling your car, in the other hand you got your ExxonMobil and it's up 30%.
Right. Yeah.
And you're like, yeah.
That's paying for that.
Even more so.
Right.
I'm not a prepper, but I'm a Boy Scout that likes to be prepared.
Yeah.
And we'll keep food in the freezer because you never know when it might be hard to get something, Right. And it's funny because the insurance I buy for inflation, meaning I might buy an option on maybe a exchange traded fund that is tied to staples, consumer staple type stuff. Let's say I make a little trade and it goes up. You go to the butcher and you buy $1,000 worth of stuff and throw it in your deep freeze, but you have $10,000 in your trade over here on your inflation trade. And it's like, wow, the inflation trade more than paid for the inflation of food. And those are fun games to play.
Right.
When you can get lucky enough to do well with them.
Somehow I don't think luck ties into it. I mean, there is the old adage, I'd rather be lucky than smart, but so luck is nice when it happens, but I think there's a lot of planning and thinking that goes into all this, right?
Yeah, there is. I guess I say that because I just feel lucky. I got good friends, I got a good family, I've had a good education, so I feel lucky.
I would call you fortunate, but I think you made your luck. Yeah. So just kind of like summarizing, because now people say, okay, you seem to have great context, you understand things, you understand historical context, you understand money, inflation, deflation, the markets, etc. So for you personally, you have some investment in real estate?
A little bit.
A little bit in real estate?
Well, when I say a little bit, I'm probably more than the average person, but I hang out with Kenny McElroy, who's got like $2 billion in real estate.
Yeah, well, let's not. Yeah, but let's just say. But as far as a percentage of your investment portfolio,
I have a significant.
You have a pretty good amount in real estate, and then you also do you hold crypto? Any crypto at all?
I have a little crypto. I'll confess, my crypto is mostly for my students.
Okay.
I have so many students that wanted to learn it that last September I said, all right, let's go. I'd had crypto accounts here and there and bought it and sold it. But I said, if they want to learn the crypto, I guess I should learn it too. And so I started it in November. We started a crypto account, and I've done a lot better than I thought I would. I thought I'd stink at it, but we've done pretty well.
And I happen to know because you spent some time with me on a Zoom call. Showing me that you're trading options in there, and you're kind of there's a burgeoning options market in crypto that's starting. It's got a long ways to go, but it's starting to mature.
Yeah, it's of all the options markets I'll trade, it's the worst one.
Yeah.
But I'll tell you, it still works, and if you know what you're doing, it's been fun for the students to watch it over 6 months because crypto from when we started is down huge, but our account's just fine. Yeah. And those that have been there understand why that is.
Yeah.
And it really is, it's gone better than I thought it would.
Yeah, and that's interesting because when you showed me that account, you showed me it saying here's was the total investment, and here's the current balance, and there was a significant drop from when you bought in.
For sure.
But you balanced that whole thing out from the options trading that you did, and that's how you protected against it going down, which is what options are all about, right? So that was pretty fascinating.
Yeah, if a person is tuning in, they're obviously interested in the topic of wealth and they want to improve their situation. And the thing I would tell them to start with is there's two paths you can go right here. You can go with an advice mindset of trying to find people to tell you what the right thing to buy is. That's Wall Street. That's how they get rich.
Right.
That's the newsletter people. That's how they get rich. Stop for a moment and ask yourself, why am I asking advice? Why am I going to this person asking advice? Often when I'm interviewed, you don't do this, but Andrew, what would you buy right now if you had $10,000? They're just looking for a fish.
Right.
They want to learn to fish. They're looking for a tip. If you can get away from the CNBC Wall Street, culture of tip giving and just say, you know what? How would it feel if I could look at a financial statement of a company and their chart and feel like I could make my own decision with confidence? How would that feel? Right. What if I could look at a piece of real estate and not just be dying about whether or not I should buy or not? What if I knew what a good deal looked like? You can learn it.
Yeah.
Because even imperfect guys that have made huge mistakes, that were average students in school like me, you can learn it. You can learn it. And that's where I would start is, do I want to free myself of the 401k advice culture where other people do this and decide, you know what, tying my shoes is a life skill, brushing my teeth is a life skill. I could hire those out, but you know what? Money is a life skill too. I think I'm gonna learn it.
Yeah.
That's the first step. That's the first step into a totally new context and really a new life.
Well, of course, what you're suggesting is self-responsibility, and
oh boy, don't put me in that camp in this day and age. That's the camp I'm in.
That's the camp That's the camp all producers are in.
Patrick, that is so important what you've just said. I was having an interview with a lady who wants to change the system. She'll go in front of Congress and say retirement's broken, we need more laws, and she and I agree on the problem. We need something. But I really don't have any faith in a government to systemically fix the wealth gap. But I have every bit of faith in the individual person, every bit of faith that as an individual, you can position yourself come what may. There is no government policy that has the horsepower to compensate for a really poor personal policy on finance. If you are not solid personally, there is no strength, no government policy is so strong, no safety net so high that can save a person with a bad personal financial policy. On the other side of that, there is also no government with such a horrible policy that is unfair and makes everyone a victim. It cannot overcome the horsepower of a strong individual personal financial policy.
And I think that's what's the solution? People would say it's get out of the way and let the market take over. Let people who are producers come in and produce and create value and rebuild, which will rebuild the middle class and lower that wealth gap. It seems like to me at this point we're past the fail-safe. Meaning $200 trillion roughly.
Isn't that incredible?
It's like
breathtaking.
I don't see any way out. So it's a matter of how long can they keep deferring or kicking the can down the road? And I guess the answer is nobody knows. And I think that circles back to self-responsibility, saying, listen, if you're watching you and I have this conversation right now, what my mentor taught me, Nathaniel Brandon, he wrote the 6 Pillars of Self-Esteem, but one of his pillars was the practice of self-responsibility. Yeah. And what he would say is, no one is coming to save you.
No.
And he got in front of his, he'd get in front of his audiences and workshops, and he'd repeat over and over again, no one is coming to save you. Do you hear me? No one is coming to save you. And at one of these workshops, somebody raised their hand and said, but Nathaniel, you came. He said, yes, I came to tell you that no one's coming. So this is I think why we are creating this series is to say time for people to take personal responsibility, because the government is not only not going to save you, they are, as Reagan said, they are the problem. They're causing the problem.
You know, this is a really core part of our conversation, because when someone hears you say that it's about personal responsibility, if that person feels pain or any type of discomfort with the idea of being self-responsible, what an opportunity for personal development that they can have. Because in reality, my son got to a point where I used to, tie his shoes, and one day, he said, "Dad, I want to do this myself."
Right.
There is a pride and a joy in that.
Yeah.
It's a good feeling to say, I don't want to be subject to a corporate policy with a boss, financial freedom. I don't want to be subject to a government policy, because the moment I rely on them, they now will control my standard of living. I can't change corporate policy. I can't change government policy with just one vote or one note to my boss. But when a person says, well, I will be dependent on myself, that truly is what makes a person free from a government. I'm not very political. Some of my friends become very passionately political. I still, probably to my detriment, I still believe that no matter what country you live in, you can take your personal rules, your personal stuff, your personal development, and you can create a really nice life if you create your own personal rules. So I don't see, so again, if someone feels pain or discomfort over the idea of personal responsibility, it's probably because they're afraid that they couldn't do it. They're probably afraid that I can't go out there and survive, and the world is too big, it's too tough. What solves that? Two things: education and temperament. Yeah. Toughness, a little bit of toughness, you can do it.
Yeah.
You can do it. And so for me, personal responsibility is a very attractive idea because it means freedom.
Yeah. And it starts independently.
It does.
To your point, it starts with you, freedom. It's not like somebody has to hand it to you. It's you have to assume it, in any ways that you can, given the context of your circumstances. As you said, certainly there's countries and even locales in this country that are oppressive in many respects, but it doesn't mean that you just surrender. And the whole point, I think, is not having excuses.
And it doesn't mean you're alone.
That's
right. The other thing. Someone gave me a nice compliment when they said, "Well, Andy's a self-made man." I'm like, no, I'm not. I may not have started with a lot of money myself. I might have started out poor. But I'm not self-made, because I look around and I have so many wonderful teachers and friends and people that I can call and get help from. So don't think that personal responsibility means you're alone, because when you surround yourself with great teachers and great mentors and good advisors and a team, you're not alone in this. Yeah. You can still be self-responsible, but you don't want to be alone. Being alone sucks.
Yeah, exactly. Yeah, isolation doesn't work in any way, shape, or form, and that's why I am so appreciative of you coming and sitting with me and sharing so freely as you often do and always do with the people who are here to learn something. So
I tend to be a little bit verbose, because you know how much I love talking about this, but I think this has been one of my favorite conversations we've had, because people want the details of nitty-gritty. Tell me what to buy, what about gold. But really, we've talked about some life-changing, big-picture concepts that I think can take people exactly where they want to go. So thank you.
Thank you. And to that point, incidentally, I think this is important, because it's not about coming here and just saying, we'll do this, this, and this, because when people do that, again, they're not taking responsibility if they're just following an instruction. They're being that employee mentality, following the boss's instructions. Not that that's a bad thing necessarily, that there need to be employees that go out and follow boss's instructions, but in this particular case, what does it really do psychologically? If it works, great, look, I'm here, but if it doesn't work, oh, well, it's his fault. He's the one who told me to do that. Yeah. And that's, I think, the whole point is you got to do the work, you got to do the study, and then draw your own conclusions about what's the right thing for you. And, I started out saying that, whenever I sit with you and have a conversation, it's a spiritual experience, and that's why. It's because this isn't a mechanized process that you just go and check these boxes, do these things, and you're done. You did your work. No, you have to search your own soul, and you have to understand yourself and what your dreams and visions are, and what freedom means to you, and all those kinds of things. And that's what you get people to do. And I think that's what makes you extremely unique and valuable to other human beings in this world. So I thank you for it.
Well, it's spiritual for me too, in that, for me, I mean, I have a spiritual experience when I eat a steak, so, but what spirit means, it comes from the word inspire, which means to put breath in, to put life in. Yeah. And in times like this, people need spirit, they need to put breath in. And I would just say, we started, they said, Andy, how do you see the world? I says, boy, there's so much opportunity right now. And if a person can't see that, learn a little bit. Yeah. And it's great. That advice culture, if I tell you to buy gold, you didn't learn anything about gold. That's right. If I tell you to buy crypto, you didn't learn anything crypto. And when the world changes, that good advice became bad. Mm-hmm. So I'll choose education over advice. And thank you, just, everyone at Revealed Films, I've known people at Revealed Films for many, many years, and they're among my special and dear friends. So I'm just so grateful when you extend the opportunity to come and share what little I've learned so far as a student about investing.
Well, thanks for being humble. I think you learned more than a little, and you certainly have shared a lot. So I really appreciate it, Andy. Thank you.
Thank you.